analysts on the show. Hi, Pavitra. Congratulations on a good showing. Well, I was wondering whether or not there was any kind of miss in the numbers, but going by the face of it, it's looking quite good. So let's talk about numbers then. How has quarter four been in terms of traction? We're almost halfway through the quarter four. And what do you end this year with in terms of sales, in terms of collections?
Hi, thank you. Thanks for having me on here. And yes, we're pretty happy with how Q3 has turned out. Operationally, the numbers are very good. And we actually continue to see this trend continue for quarter four. Both in terms of residential, we've actually had a number of launches currently ongoing. So a lot of the launches that we were expecting earlier in the year are coming in into Q4. So we're quite happy with that. So I think we're right on track to have an extremely good quarter. Hopefully, it should be our best one ever in terms of residential sales. Office leasing as well is going along. We do have mostly non-SEZ space, SEZ space. So in terms of leasing, that continues to be a bit of a challenge, but we have a good pipeline. All our buildings are quality developments. Retail and hospitality are doing extremely well. Hospitality's had a fantastic quarter, and we hope that will continue for the rest of the financial year.
Okay. Pavitra, hi, good morning. It's great to hear that. Q4 should be your best one ever in terms of residential sales. It is a dream run, right, that the real estate companies are looking at right now after many, many years of a slowdown. Tell me, in terms of realizations, are you expecting a better performance? I mean, in this quarter, you've done almost 6,600 rupees a square foot. Are prices moving up, and hence, can you do better in terms of realizations in the quarters to come?
Yes, actually, we're seeing pretty good demand on the ground, which is very heartening despite, any increases in the repo rate, which I know has been on everybody's minds. Despite that, customers are really looking for new launches. We're able to take up prices during the launch phase itself, which is a really good sign. For our own realization, we have seen it come up. We have been launching plotted development projects. So from that aspect, there could be, a slight averaging down because plotted projects realization isn't as high. And as we see more inventory come on from Chennai, which we're hoping to see in the next 4 quarters towards the end of next financial year, that should also bump up our average realization. But overall, we are taking price increases wherever possible, and it is supported by demand on the street.
I think the residential part of the Chennai project was to launch in Q2 of FY24, right? Are you pushing it forward?
No, I said at the end of Q2, at the end of FY24 is what we're pushing for. We'll have to see if it comes through. There have been some of the approvals have taken a little longer, but that's okay. I mean, we just need to get the right kind of product out there. So that will not come in Q2, but hopefully towards the end of FY24.
Got that. Pavitra, mortgage rates are now hitting 9.5% if you take into account the latest repo rate hike. When we had spoken to a lot of real estate companies in the past, they had indicated the threshold was 9%. After that, demand starts slowing down. It starts pinching people who are taking EMI. Do you foresee in the next 12 months that mortgage rates above 9%, 9.5% is going to slow down things?
We'll have to see how it goes. Obviously, we're keeping an eye on it. But so far, there hasn't been an indication of a slowdown. I mean, any sensitivity to even the ramp up from where we were, sub 8s, 6s, 7s. Despite having seen all that increase in rates over the last year or so, we haven't really seen any change in the demand. I think there really is, a structural change finally in the residential cycle. We have been due for this upcycle. There's been a lot of demand that has just been sitting on the sidelines. A lot of the new projects are actually right-sized to the kind of demand to the kind of preferences that customers have. So I think it should still be quite good. There's been consolidation in the industry as well. So I think the quality of the product that is coming out there and the ticket sizes, all of that is just hitting the market at the right spot. So given that, some customers still always go for home loans. Many of them don't opt for it at all. So we don't see it impacting just yet, but we will continue to keep an eye on it.
In terms of guidance for new launches, you were looking at about 12 to 15 million square feet of new launches in the next 12 months. Is that the annual run rate that you're going with, or would you have any change in the plan?
I mean, we'd love to have, that kind of number every year, but,
Sure.
when you're looking for land, it's difficult to sort of say that you will exactly hit those numbers. So we are aggressive on the land front, both in Bangalore, Chennai, and Hyderabad, whether it is across plotted or mid-segment residential housing. The 12 to 13 million number was like a full number, assuming all of our Chennai launches hit during the next financial year. We could see some delays on that front. But apart from that, I think we are still aggressively looking to grow our top line, substantially year on year for the next few years. We think it is the right time for the residential sector.
Okay, that's on residential. What about the hotels? You said that you've added 2 hotels which could, aid your realizations. Have those hotels broken even, and what is the expectation in terms of the occupancy there, since the industry is picking up in a big way?
Yes, we have 8 hotels today. We're actually taking up capex on one more in Mysore. So we do see the newer hotels that have come on board, they are increasing their occupancy. Overall, we've had a very good quarter, in Q3, and we continue to see the same, whether it is in terms of F&B, banquets, or meetings and conventions, and so on. So in terms of occupancy, we're above 60%, 65%, which is more than pre-COVID levels as well. And all of the realizations, the ARRs across all the hotels are all pre-COVID levels as well. So despite all our hotels being business hotels, which was sort of a challenge during COVID, most hotels doing well at that time were resorts. So I think now is the time for business hotels with domestic and international travel coming back. So we're quite confident of having a very good year for the hotels as well.
What could Q4 occupancy look like? In Q3, it was 68% for the hospitality business. Does that number inch up? And what about the ARR, the average room rent?
Yes, we think it should increase a little bit, especially in our Bangalore hotels. There's a lot of conventions and the aero show that happens in February as well. So due to that, I think our Bangalore hotels will do much better.
Okay, all the best. Thanks a lot, Pavitra, for joining in. And